Good morning, good afternoon, and good evening to all of you, depending on whatever time frame you guys are based on. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and it is a pleasure to be with you guys folks today, and welcome to our weekly webinar session, the masterclass where we discuss about the future, trends and trades and opportunities within that. So if all of you guys can hear me, please confirm yes or no, and also if you can see my screen. Okay, wonderful. Great to see some of the people who are already I've started to recognize from my previous webinars and stuff. Well, this is great. So as I mentioned earlier, my name is Naeem Aslam. I'm the Chief Market Analyst at AvaTrade. I head the entire research department. Today, we do have a lot to cover and a live price action, live trading as well, because at 13:15, we are going to get the first component of the US non-farm payroll. And as a part of this masterclass, I am going to do that. I'm going to give you that guy as a free bonus, where we will look at the trading opportunities in the live price action, folks. So very, very exciting opportunities, and it is going to be a very live session today. So very quickly, I'm just going to do some of the housekeeping before we move forward. So as always, I'm going to skip through some of the questions, and because of the lack of time and because we want to do a live trading session today. So let's begin by looking at the most important slide, which is the disclaimers and risk warnings. Anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors who will have much better information about your risk profile, and they'll be able to guide you according to that. This is purely for education purposes only. Now, first of all, guys, as always, you will see also in a live session today that I cannot, as always, emphasize enough the importance of you guys being on a Twitter. If you are serious about trading, if you want to trade, then the most important thing for you guys is to know the news which is going to influence the price action of those derivatives. And if you are going to continue to wait for those news, for those articles to come out on a general tier 1 media such as CNBC, Bloomberg, and Wall Street Journal, you will be too late in the game, folks. You will be too late in the game. Why? Because it takes time for these media journals to put out the story. So the most accurate and the most quickest, for sure, that sort of information that you can get is from Twitter. So if you see a sudden move while you're trading the euro against the dollar or sterling against the dollar, like we will do it today, you will know why that move has happened. And in order for you guys to know that, you need to be on a Twitter. You need to follow the right accounts, the right people who can provide you all sort of that information. So as you can see, my Twitter handle is right in front of you, and I will show you how to follow that and then do all of that as well. And of course, AvaTrade's Twitter account is right next to my Twitter handle as well. Now, in terms of YouTube, folks, on a daily basis, we produce two different sort of videos. Daily fundamental video, where I break down things in a lot more digestible way. You guys can understand them. It is a lot more easier for you guys to go through all of that and understand it. And for those investors who are slightly bit more sophisticated, for them, I have the technical analysis video. And that video, what it does is it takes you through, it walks you through various different price levels and the factors which are really going to move the market on that particular day. Right, so let me just quickly go through those tweet handles and all of that. So let me bring that up for you. So here you go. As always, you need to make sure that you're following the Twitter account for AvaTrade, which is verified, because we are verified on Twitter, and the Twitter sign is right next to that. And as you can see, there are so many tweets throughout the day. And here is me sitting here just giving you the market reaction of that in a very small and concise within a 2 minutes. Now over here, this is my Twitter account. As you can see, the handle over here, and then all the charts, the trade ideas, or the from the education perspective, and the news is like which really matters. For example, in relation to Japanese yen, we had a big news today, and of course to support you guys with some good sentiment news, with moral, psychological, and all of that sort of stuff is there as well. So again, it is quite important for you guys to stay active and then get notifications directly on your phone while you are trading. These notifications will pop straight onto your phone. Now, as for YouTube, this is the YouTube session. Over here, you will see all the videos on a daily basis, the fundamental videos where we'll be talking about, what is really happening in the market, and of course the technical analysis videos. So I'll highly recommend you guys to go through them and have a look at these videos as well. Now, let's go back and quickly discuss the agenda for today, what we're going to do. So as I said, as a bonus session for you guys today, we are going to look at the ADP as a trading opportunity. And we are going to look at the different derivatives which will be moving on the back of that ADP data. So stay tuned, and stay active and stay proactive with that. Now, in terms of agenda, what we're going to look at, the importance of US NFP, what makes the US NFP reading, what instruments to trade with respect to that, the current state of markets and analysis, defining levels and defining strategies, right? So importance of US NFP, very quickly to go through that again. It is called the mother of all economic numbers because it has a tendency to move everything in the market which is dollar denominated, or even if it is not dollar denominated, because US is the biggest economy in the world, and anything happens, it has ripple effects throughout the world. And secondly, what makes the US NFP reading? The first one you will see today out of that is the ADP data. So let me bring that out again. Excuse me. So what you can see is you can go to Forex Factory, you can go to any or even AvaTrade's website as well. You can download the calendar from there as well. I do both of them, and then what we got to do is we've got to look at the components of the US NFP and why it is important. So the first one was as of yesterday, that really brought life back to the dollar index. As you can see, the ISM manufacturing number popped higher against a forecast of 54.6. Number was a lot more stronger than what many participants were really expecting. The second one, which is going to be coming in at less than 6 minutes, is going to be the ADP non-farm employment change. The expectation is for 1.2 million against the previous reading of 167,000. So we are expecting a large number of jobs coming back in the market, and that is likely to move. Sorry, are you guys saying that no audio? Is there a problem with audio? Guys, can you guys hear me? Okay, so everyone is saying that yeah, audio is fine. So I think just one particular individual who said that he doesn't have audio, just maybe check your mic, your headphone connections and stuff. So very quickly, guys, in a 5 minutes time, we are going to trade this US employment change, this data which is coming up. And as I said, this is going to be very, very important. This is going to set the tone for the upcoming data, which is a US NFP on Friday at 1:30 UK time. We will get all these numbers: average hourly earning, non-farm employment change, and unemployment. Interestingly, something which really matters over here is that the unemployment rate is expected to fall in a single digit from double digit. Previously was 10.2. Now the unemployment rate is expected to fall to 9.8%. Now, let's quickly get the levels up and then discuss the price levels that we are really going to be looking at. Now, obviously, there has been a tremendous sell-off in terms of gold price. It is trading right now, as you can see, just below that in critical mark of 2000, trading at 1956. If the number comes very, very strong, the dollar is likely to become more powerful. We are expecting for the market to drop to 1990, 1919. In terms of sterling dollar, the useless currency right now, which is rising for no particular reason, is also expected to drop sharply, because this was from our yesterday's YouTube video that we did. The price moved in our favor of 100 pip, and I expect this move to continue to drop below the 133 mark if the number is very, very strong. Similarly, I'm going to bring out the euro dollar as well. This was once again the story of a stronger dollar over here, sorry, weaker dollar over here, and then now dollar becoming more strength, picking up a strength. Hence, we're seeing the weakness in that. We will look at the price to come in around the lows of 1.18107, which is the low of this candle. So we're going to mark that right over here, as we can see. And then with respect to the Dow Jones futures, what we really look at is we've already broken at the lows, the highs of yesterday, and the high of this particular candle is 28,707.78. The high of this candle is already higher than the highs of these weeks. So obviously we have erased all the losses for this particular week. So in terms of this, what we're really looking at, we've got to go into a smaller term time frame, not much reaction, not much trade over there as well with respect to that. And when I look at the hourly chart for this, again, I don't see much opportunity for the Dow Jones index as well, but obviously our strong data is likely to reaffirm the rally. A weak data is also likely to reaffirm the rally. So it's a very much of a Goldilocks scenario for that. But with respect to gold, that is where we are really looking at. The low of this candle, as we can see, is 1954. The low of today is 1953. So we already have a lower low as compared to the 2 days ago, the low of this week. We are expecting for the price to come into here near its 50-day moving average for us to have a clear confirmation with respect to that. I will just quickly put the RSI on it just to have another relative strength index. Here we go. I'm going to leave it as normal. So what we've seen is a downward trend, which is very much in line with the price. So price from here to here is a downward trend. RSI is confirming the same from here to here, downward trend. So there's no divergence. So I was looking for a bit of a divergence, but a little bit of a divergence is coming from this point to this point. Because the price is, this isn't very, we won't even really call it a divergence, but yeah, the price is moving in a sideways, and this is very much confirmed with the RSI as well. I wanted to say that yeah, RSI is holding up while the price is really making slightly more higher lows, but I can't really say that. I think it would be a bit too much of a push. So less than a minute left. Now let me go back to the main platforms over here. Here we will see the number coming here, right here in front of you. There you go. The ADP has added. The number is out. and the number is out. That is 428, folks. 428 is the number with respect to ADP. And this is why I was saying to you, if you are on a Twitter, now you will get that news straight on your platform without any, come on, it's not okay. All right, so it's just done it too many times now. There we go. So this notification will come straight on your phone. Now quickly have a look at the price. So the price is moving slightly off its lows because obviously the number that we were expecting, as you can see from our number, was, if you remember, all of you guys, we were expecting the ADP number to come at 1.2 million. The economy has created far less jobs than what the market was expecting. Hence, dollar is weakening more, and we should see the same sort of a trend over here as well. Gold is also off its lows. As you can see, we are seeing on the 5-minute chart, we're on the 15-minute chart, we're seeing the massive bounce to the upside, and this bounce to the upside is very much because of the numbers which came out, which was weaker than anything the market was expecting. The economy has produced less than half what the market was really expecting. So obviously there isn't much stronger number here at all. And as you can see, now the conversations will the conversations are moving that, yeah, it is a slow recovery. It is not very a strong recovery, and because of that, we're seeing that movement. But nonetheless, what we got to understand with respect to this as well is that we have recovery. That is also an important thing to keep in mind, So we cannot say that we do not have a recovery. The economy is creating the job. It is creating jobs, right? And that is what is quite important with respect to that is. So as long as we are creating jobs, as long as the economy continues to create jobs, we are okay. But yes, the recovery isn't as strong as it was expected. And that is the reason. I don't know why this chart isn't really resetting. I wanted to reset it, the 5-minute chart, but let me just quickly have a look at the S&P 500 as well on the 15-minute. And as you can see that the market, as we said it, exactly as we said it, the market is moving to the upside because of two reasons. Yes, we have recovery, which is positive. And secondly is that, yes, we don't have a strong recovery, and that because we don't have a strong recovery, and because that means that the Fed is likely to stay dovish for a longer period of time. Again, switching back to the euro dollar quickly, what we're seeing is that, yes, the retracements that the movements, the earlier movements that we are seeing, they are still building up, as you can see that, right? But the price is finding it's difficult to break above these levels, 1.18 and 76. These are the levels we need the price to break above that. The moment that the price breaks above these levels on a 15-minute time frame, then you put the stop loss right under the below of the lower low. So that is what we are really looking at. So right now, well, in terms of trades, in terms of what we are really looking for, we do not have any single clear opportunity. So we are holding fire. That is the thing. So if we have already position in gold, which like I do, it is going good because the prices are moving higher. So that means dollar is becoming weaker, but gold is also moving higher because of not strong recovery. But we have recovery. That is the important aspect. You see, dollar is still moving lower, and sterling and euro is moving higher on the back of that. The story would be very similar for the sterling dollar as well. Now we're looking at sterling dollar. You can see that it is off the lows of the day because the lows of the day were right at 1.332834, and now it is trading at 1.3359. But again, when I switch the time frame to 30-minute, this is the resistance level right over here. Let me just mark that for you so that you know where the resistance level that I am looking at. So I want the price to break the high of this particular candle, the highs of these candles, the high of this candle, only then it will confirm that yes, we have changed the trend and the market is going to move higher. I think it is going to see enormous amount of pressure near these moving averages. This is your 50-day moving average. This is your 100-day moving average. And see where the price found its support. It found its support just near 200-day moving average. That is amazing on a 30-minute time frame. How accurate and how much support this 200-day moving average has been providing on the 30-minute time frame. You can see that the first one happened here. The second opportunity came over here. Again, quickly switching into the euro dollar. And then just seeing that if there is a trade over here as well, again, there is no trade, but if the price continues to move higher, the resistance that I'm really looking at, the trade that I'm really looking to trade or to short is right around these levels, right under the bottom of these, when the previous support becomes resistance now just below that. But if the price breaks above the 200-day moving average, that is great. Otherwise, the next trade is that if price fails to break above the highs of that, and we have a dovish candle forming, a bearish candle forming over here, then we put the stop loss on top of that and then shoot to the downside, right? From that perspective. Does that make sense? Everything that what I'm talking about, because this happened to be a very, very live trading session today. This is a a big bonus for you guys. Okay, where I'm looking on Twitter to get this info. So I've shown you the Twitter account again. I will show you the Twitter account. And as I confirmed to you guys earlier, so that is a profile right here in front of you. Naeem Hassan 23, and for AvaTrade, it was AvaTrade. But if you follow any one of them and start interacting, so you can see that the tweet went up straight there. So it just confirmed that, okay, this was the number that everyone was expecting. Everyone was expecting over 1 million, but the number was a lot more less than what everyone was expecting. So why don't we just have a actual tweet around that as well? So we say the dollar index has become, or let's just say the dollar index continues its downward trend after the US ADP data. The US economy created less than 500,000 jobs when the forecast was for 1.2 million. This confirms that the recovery is weak. Yes, so we'll just confirm the numbers once again by looking at that. So when we look at it, you know, the number is much lower than the forecast, but much better than the previous number. So, you know, improvement, but not a big improvement. So now let's say now for the stocks, this is good data because, let's say, because we have economic recovery, but not a strong one. All right. There you go. So that really clarifies what you were really talking about over here, right? So it just kind of gives you the full reaction in terms of the price. Now, the next question is, where do you see gold in the next 4 weeks? I think it is likely to continue to move higher. Are you bullish or bearish at this point? I am long on gold. I don't have 1,000 euros to invest. Okay, I don't know what to say about that. How is dollar correlated to gold and crude? Dollar, because when we look at dollar with gold, it is trading against the dollar. Same for crude as well. It also trades against the dollar. It's like XAU/USD. That is what we are really looking at. When we look at gold price, like over here, it is in dollar terms. So the weaker the dollar, the higher the gold price. Okay. So hope that all of that kind of makes sense. Now, any more questions with respect to it? Feel free to shoot more questions on it. Now, folks, if you don't, then what I kind of wanted to discuss from here onwards, and as we move towards the US NFP, so the tone is set for a fragile recovery. So basically, that is what we are looking at for the US NFP number. Now, again, when we go back to the US NFP data, and then we see that the unemployment rate is expected to drop to 9.8%. Non-farm employment change is supposed to be coming at 1.3 million against the previous reading of 1.7. Now, if the number confirms, which is better than the last one, but not as good as the forecast, again, we can see very, very similar price action what we're seeing today in terms of the markets. So it will be that, okay, recovery is taking place, but we need more time. We need to wait for the vaccine and all of that. So that is what is really going to drive the markets. Now, in terms of a Dow Jones, between now and until Friday, I think what we really wanted to focus on is all-time high, the previous levels for a Dow Jones index, right, which is right over here. So let's see if the price can really break above that, or if price can really achieve that, because I think this is a good level of resistance, and the price is already hesitating quite a lot. In terms of S&P 500 index, what I'm really looking at, that there is a good upward trend, good upward support. In terms of a support level, if there is any retracement, is over here. Otherwise, let this rally to continue to move upward, and let it just move higher as much as it wants. And with respect to gold, we really need to kind of break out of this sideways pattern. Currently, again, very much the price is moving in a sideways pattern. Today, we are forming a bullish candle. Yesterday, we formed a bearish candle. The day before, we formed a bullish candle. And the 2 days before that, we had a very bullish price action. So it's like, market is going nowhere. It's just moving to the sideways. And as long as the price stays above the 50-day moving average on a daily time frame, I'm okay to hold gold prices to continue to let the prices continue their journey to the upside. So that's pretty much with respect to that. Now, with respect to the euro, again, we see like what we're seeing is really, really good now. What we're seeing is that the price is retracing, price is moving lower. Now, if one wants to trade that, what we could do is, once this 15-minute candle is over, you can place the stop loss either above this particular line, or you can place a stop loss above the 50-day moving average on a 15-minute time frame, and let this trade run, because you will be trading in most of the what do you say, in the longer term time frame, and that is the time frame that we are really wanting to trade in. So the time frame is saying, yeah, okay, on a 30-minute or on an hourly or on a 4-hourly time frame, what we're seeing is that, yeah, trend is to the downside, and as long as the price is staying below these moving averages, there's nothing which can really support the market to move to the upside. But remember, that is only for intraday basis. All right, folks. So we're gonna call it a day over here, and I will see you guys in our next session. I hope this was very helpful for you guys. I hope you guys really enjoyed this opportunity of doing a live trading with me today. And unfortunately, the situation wasn't really there at that time, but now the opportunity is really coming. And as you can see, the 30-minute candle is complete on euro dollar. So I will really go for this particular trade because, you know, we have a lower high. This was a higher high. So we'll just put the stop loss on top of that, and then maybe wanted to see target this price right over here, the lows of that candle. That's what you kind of wanted to do. All right, that's all for today, and I will see you guys next time.